Well, hi guys, welcome to this edition of Earnings Express. I'm Nandita Khemka and you're watching Moneycontrol. As we step into the earnings season, of course, tomorrow we have FMCG numbers, big ticket FMCG numbers coming out. You have the likes of HUL, Nestle as well as ITC all on the same day. So it's going to be a busy day for somebody who tracks the FMCG sector closely. And of course, I'm talking about my colleague here, the in-house FMCG man, Mangalam, Maloo, who joins me. It's our customary FMCG chat that we have every quarter, and tomorrow Mangalam, busy day, all three numbers on the same day, which doesn't really happen generally, right?
It doesn't happen generally. I don't remember the last time we had three numbers of this magnitude together. I remember HUL and ITC reporting it together once, but now it's like a hat trick. It's like a bit of a hat trick. You have HUL in the afternoon around 4 p.m. or something. Nestle usually comes in the morning at around 11 a.m. and ITC is in the evening, should be around 5 to 6 p.m. So if you had to, distinguish them by the time of their results, then maybe 11 a.m. everyone has Maggie and a cup of Nescafe coffee.
We usually do.
Yes, 4 p.m. is post work, so you just get an ice cream or something from HUL or maybe Lipton chai. And by 6 p.m. then you have ITC products. A lot of people will talk about the cigarettes, etc. No, we're not talking about that. We're talking about chips and all, bingo and all of that and stuff. So maybe,
Right. So so
full day's work.
Full day's work. But let's talk about the overall, expectations from the entire FMCG universe. Any changes with respect to demand environment? Because we know that inflation did see a surge, so that impact will play out. Then, of course, there's the delayed festive season. That impact could also play out, right? So, what are the factors that would be impacting the entire FMCG universe in the second quarter?
Well, there are a couple of push factors and a couple of pull factors as well. So, the push factors, basically things that will take people away from the demand, is that monsoons, while they have been, so far normal, the spread of the monsoons haven't been even. Secondly, the month of August, we did not see very good monsoons either. So the El Nino impact was still there. And thirdly, inflation, while it was higher and has begun to cool off, it takes a bit of a lag for people, for it to, reach people's pockets, as does consumer price cuts that these companies have been taking. So all of that will take some time, and coupled with the other factor that there was an Adhik Maas period, which is, Shravan and Adhik Maas. Adhik Maas is usually, by the Hindu calendar, not a very auspicious period to do a lot of things, and as a result of which, all the festive season has been delayed as well. So the pre-festing buying hasn't come. So these are a lot of the push factors, so they've taken consumers away from demand. However, what's kept the consumers at demand? One, premium products doing extremely well. Aspirational products doing extremely well. The price offs that the companies have given has resulted in some demand generation, and a lot of these companies who saved on gross margin expenditure have refocused or repurposed those savings into ad spends. So as a result of which, there is advertisement, there is a buzz which has been generated, so people are buying some of those products as well. So those are a couple of push and pull factors. The question is, what happens then, right? You have both these factors. So think of it as a tug of war, with the rope virtually not being very one directional, and it's just shifting. Most of the people believe that it's the second half of this year where we will see more recovery. The second quarter will be not very different from what we've seen in the first quarter itself.
So, not much difference from the first quarter. So, let's talk about the companies one by one. HUL, not much changes there as well. Volume pain was there in the last quarter, expected to remain this quarter. And what about revenues? Do you think they'll be impacted due to the price cuts that the company may have taken?
Well, one thing that will stand out this time around is that the contribution of revenue in the overall, the contribution of volume in the overall revenues that the company report will be a lot higher than what they were. Say last year, for instance, what happened was volumes would be 0, negative, or 1 or 2%, but the revenue growth would be 9 or 10% because the companies would have taken that 8 to 9% sort of price hike. But now this time around for HUL, most of the companies actually are expecting mid-single digit revenue, and you're expecting mid-single digit sort of volume as well, which is telling you that yes, the companies have taken price cuts, but those price cuts have resulted in some improvement in the volumes. So those 1-2% volumes have now gone to 4-5%, and the revenue, which was about 10% because of the higher prices, have now come down to about 1 or 2% itself. So you add both of these numbers together. For HUL, we're working with a 5 to 6% sort of revenue growth coming in, and the volume growth for them should be around 3 to 4%. So that's that 1-2% price difference. The EBITDA also is likely to grow a tad shade higher than the revenue, which would mean that there is some margin expansion, but the margin expansion will not be as much as the gross margin expansion. The commodity prices have fallen a lot more, but that will not immediately reflect in their margins because the companies are now using those savings and plowing it back on the ad spends. I'll give you an HUL example, for instance. Last time, in the same quarter, they did ad spends of around 7.1% of their sales. This time the gross margin expectation is an improvement of almost 400 basis points. But they'll take those 200, 300 basis points and keep ads as a percentage of sales at around 10%.
Right. Let's talk about the next one. ITC, of course, hotels business demerger is going to happen. Then you have the FMCG business, cigarette business. What are the expectations from each of these businesses? And FMCG, do you think it's going to be a shade better than what HUL will report?
Totally. For ITC, because it's one, a low base. Secondly, they have a wide range of products. Thirdly, they are extremely aggressive on FMCG. So those things will do well for them. Fourth, most important, they're also coming off a favorable base. Same time last year, the time before that as well, schools hadn't entirely opened. So once with schools open, the classmate, variety or the stationery that they sell under their FMCG will suddenly see a big jump because now children are buying those, products, etc. So that will aid to their revenues apart from the new products that they've launched and the new distribution points that they've come to. So ITC FMCG business likely to grow between 10 to 12% as against HUL, which is around 5 to 6%. Secondly, the ITC cigarette business will grow in the industry line only, which is about 4 to 5% is what the volume expectation is. 6 to 7% is the price expectation. The EBIT grows at around 8%. Hotel business, strong growth is expected, but it is also on a strong base. Same time last year, there was this reverse revenge tourism that took place. This time around, what is happening is we had the G20 summit. We had a lot of other events and consumer demand was so high, so that on a high base, the hotel business will still grow 15%. That's a big positive. What will not grow well for them is the paper and paperboards packaging business, which will see a decline of around 5 to 10% in revenue, and that's largely because the demand for value-added paper products is lower, and as is their price. And secondly, the agri business will not do well for them. Why is that? Because of regulatory action. We have an export on wheat. We have a ban on the export of wheat and rice. So those factors will impact their agri business.
And Nestle, of course, this is one stock or one company we always end up talking about because of our love for Maggi and coffee. But this is one company that is expected to outperform its peers. That's what I've picked up from the analysts. And of course, there's this whole talk about the company considering stock split, which will be the first ever in its history, right? Aside of that, what would you be watching out for?
Those are the two things that we'll be watching out for in Nestle. The thing is that Nestle consistently over the last 20 quarters or so has grown in double digits. At least their India business has grown in double digits. Secondly, they will have a higher share of premium products coming in, so their price expectation or the price growth in their overall revenue will also be higher than the other peers. So for instance, HUL volumes grow at 3-4%, price grows at 1-2%, so the overall revenue grows at 6%. For Nestle, volumes grow at 5-6%, which is not very different from the other FMCG companies, but price growth is around 5 to 6% as well. Why is that? Because one, they had earlier taken the Maggi price from 5 rupees to 7 rupees. Now they've introduced a 10 rupee Maggi as well. So that will add to their price. Secondly, what has happened is dairy prices have been seen a big surge. So all those dairy products, the child infant nutrition, all these products that Nestle makes, including coffee, the prices have gone up for the underlying commodity. So they have had to price up those products. So that price contribution for Nestle would be 5 to 6%, and 5 to 6% will be the volume growth, and that would result in 12% revenue growth that we're anticipating. For them, the bigger trigger will be the EBITDA that grows at around 35 to 40%, which will be among the highest that we've seen in the FMCG industry. And the pet care business and all the other businesses that they've spoken about earlier, integrating into their own business and growing at a low scale, on a low base at a high pace, is something that we'll be watching out for too. Stock split. What does a stock split do? In effect, it does nothing. It's basically instead of having one big packet of food, you're dividing into 10 different packets of food. But the impact that it has is that it increases the liquidity in a stock. Nestle is a 23,000 rupees stock, right? So it's not easy for one person to sell or buy. But imagine that is distributed into 10 different stocks, or say 2 different stocks at 10,000 rupees each, or 5 different stocks at around 4,000 rupees each. The liquidity increases, the volume increases, and that in turn increases the churn that we see in the stock prices. So it's easier to consume one small packet of Maggi every day for 10 days than it is to consume one big 10 pack on a single occasion.
That's true, well explained. But last question, since we've spoken about all the FMCG biggies, now let's come to some of the other ones like Marico, Dabur.
Yeah.
They've already come out with Q2 updates. What is it telling you about the kind of recovery we could see perhaps in the rural demand front? Anything? Because of course we've already spoken about patchy, uneven monsoons. So do you think it'll be like almost status quo for these companies as well?
It will be status quo for these companies. The only difference between Marico and Dabur right now for rural is that Dabur is increasing their presence in rural, and so is Nestle.
Yeah,
So
that's true.
for them, rural will always grow faster than urban because they are increasing their presence there. So wherever you're increasing your presence, you are likely to see the results of that. But for Marico, they have seen no change in the consumer sentiment. So that's something we'll have to watch out for, because they are also talking about revenue decline of around 2 to 3 odd % with volume growth of just around low single digits in their Parachute coconut oil business.
Yeah.
For Nestle, the bigger, for Marico, the bigger issue is that their value-added hair oils hasn't done well this quarter. That was doing extremely well in the previous quarter. So does that mean that the luxury and the medium-term aspirational products that we are talking about, they're also facing a growth roadblock? Because if that were to happen, then that's a problem for the entire space. Because up until now, in absence of rural recovery, the premium recovery was something that was aiding the revenue growth for these companies. But if that hits a roadblock as well when it comes to growth, then these companies will really struggle for top line. Having said all of these things, the 3 companies that I will be personally watching out for in terms of results this time around, one would be Colgate, second one would be Jyoti Labs, and the third one would be Bajaj Consumer. Why do I say that? Because Colgate has had a good 1 year behind with Prabha Narasimhan at the top, and it takes 1 year to actually see the impact of the changes that she would have made. So from a strategic point of view, her changes, will they start to show in the results or not, is something that I will be watching out for. Jyoti Labs, the stock has been on a tear. It's been the best performing FMCG stock that we've seen over the last 1 year or so. It's at a record high, and they've grown much faster than everyone else in the peer set as well. They've gained some market share. Their EBITDA has grown faster. So will that outperformance continue or not, is something I'll be watching out for. And Bajaj Consumer too has done well over the last few quarters under their new leader Jaideep Nandi as well, who's come from Asian Paints. So these are companies that have specific cases to watch out for, leadership changes, their own strategy, and all these of them have relatively newer leaders. So Jyoti Labs has MR Jyoti, who took over right in the middle of the pandemic, as did Jaideep Nandi for Bajaj Consumer, and Prabha Narasimhan for Colgate.
Right, so those were the expectations, overall expectations, and of course company specific as well. I'm very hungry on that note, Mangalam. It's time for our Maggie and coffee. So let's go ahead to the canteen from here. But for now, it's a goodbye from us. Thanks a lot for tuning in. Of course, we will be getting you updates, and we will decode the numbers as and when they trickle in. So for that, of course, your destination. You have to tune into Money Control. But for now, it's a goodbye from us. Stay tuned to Money Control for all your other news and updates.